Okay, so we're going to push on. We have six people again. Okay, so we heard from the ship owners about where they might invest their money or perhaps not invest their money. But the big issue on every ship owner's mind is decarbonization. We're now going to move on to that session, and it's entitled "The Mission Towards Cleaner Shipping." Our moderator is Dimitris Sakipis, who's head of ESG and maritime sustainability at PwC. And on the panel, we have Michael Parker, Global Industry Head of Shipping and Logistics, Citi. We have Charis Plakantonaki, Chief Strategy Officer, Star Bulk. We have Tom Lister, who's Chief Commercial Officer and Head of ESG at Global Ship Lease. We have Alexandros Hadjipateras, Senior Executive VP, Dorian LPG, and Managing Director of Dorian LPG Management Corporation here in Athens. And we have a change. Yvette hasn't managed to make it, but we have Frans de Bospoort, who's Non-Executive Director of Value Maritime. Dimitris, please.
Thank you, Kevin. All right, good morning, everyone. First of all, let me congratulate as well from my side for this great conference. I think we have a great panel as well. I'm really excited to be the moderator today. Today's panel is about decarbonization, a topic which has been discussed during the last 3 or more years quite a lot for the shipping industry. Several factors have been analyzed during these years: technological development, regulatory compliance, political influence, market trends. All of these factors, we plan to analyze them, and we plan to discuss the challenges related to decarbonization. We have agreed to have an open debate type of discussion, so I urge you to state your views around this topic, and mainly around the most significant topic that we would like to discuss today. And this is what is the driving force behind decarbonization for the shipping industry. Is it politics and the underlying regulatory compliance, or is it actual market trends, technological development, or other factors which drive the decarbonization agenda? Tom, I would like to start with you. Just state your view, and then we can continue with the debate.
Thanks very much, Dimitri, and good morning to everyone. So yes, the politicization of ESG, I suppose, in essence. Sorry, can you hear me? Yeah. I suppose my own view is rather a simple one, which is in terms of the politicization of the subject, you have to look at it at two levels. So on the one hand, clearly the regulatory agenda is being set by the politicians, so there is a very strong political element there. The EU seems to be the tip of the spear when it comes to driving forward, certainly the decarbonization element of ESG. But I think if you then look at the business level, so at the micro level, then there's just a very clear and strong business case in favor of ESG. And I think if you deconstruct the ESG into its component parts, in the case of E, the environment, and there it's really decarbonization, that's the principal consideration. For us as ship owners and tonnage providers to the container ship sector, I think our financiers care very little what we think from a political perspective. They simply want to see us decarbonize. So there isn't really a debate to be had by us, at least internally. Likewise, the regulators, they don't care what's driving us. They just want to see us comply with decarbonization regulations. And likewise, our customers, the liner companies, are keen to decarbonize. So from a business perspective, we have to meet their needs. As far as S, the social element of ESG is concerned, again, that's just good business. We need to dip into as broad and deep a talent pool as possible. So taking a very active approach to diversity seems to us simply good sense. And then G, governance. Well, I think there are few people in this room or in the industry at all who would debate the fact that rigor, transparency, and fundamental good practice at the governance level makes sense. So I suppose in essence, yes, I see politicization at the regulatory level, but beyond at the company level, it's just good business practice. That's our view in any case. But I'll hand the word back to Dimitri.
Thank you, Tom. Charis, what are your views?
Thank you, Dimitri, and thank you to the Marine Money team for inviting me here today. So, to your question, Dimitri, I will agree with Thomas on the political aspect of the part of the equation. We need to ask ourselves who are the ones basically drafting the regulations. Now, when we look at the global level, this is the IMO. The IMO comprises member states, and the member states basically represent the political will of their people. So this is, for example, reflected in the recent developments at MEPC 80, where the ambition towards 2050 was up from 50% to a net zero or around net zero target. This reflects the political will of the countries being represented at the EMO. Similarly, at an EU level, EU ETS, Fuel EU Maritime, all these regulations are decided by European countries, and they reflect the political will of the people living in Europe who are basically pushing for a greener agenda. Now, at the same time, it is very important that there will be competition in the future when it comes to green fuels. Jerry, I don't see where he's sitting. Anyway, he mentioned that there will be, for example, demand from Japan when it comes to ammonia in order to replace coal. So there will be competition among sectors, and again, governments will need to play the part in order to help allocate the availability of clean fuels in the future. Now, having said that, we do have also standards being set by our stakeholders other than regulators. We have, for example, our financiers who are requesting for disclosures when it comes to carbon emissions, but also who link some of our loan sustainability-linked facilities, so we have to meet certain targets. We have our people, as Thomas mentioned, they're very much interested in well-being and corporate responsibility programs. Nowadays, it is very difficult to attract and retain good talent in the absence of well-being programs. We have the public markets. We're a public listed company who are setting certain standards on corporate governance. We have our investors who are looking into ESG ratings and our voluntary disclosures. And of course, we have our charterers. They are looking into our RightShip safety scores, in our greenhouse gas rating scores. So along with regulatory requirements, which are driven by government and by politics, we also have standards set by our shareholders. Now, you mentioned, Dimitri, technology. Technology for us is a facilitator. It is an enabler in order to monitor, report, collaborate, but also it will be a facilitator in the sense of producing green fuels and green technologies in the future. Now, is it a prerequisite for environmental regulations? I would dare say no, because for the moment, we don't have technological solutions to get us to net zero, but we still have net zero targets in the industry. So we expect technology to follow. Final note, it is important when talking about regulations to look at it at a global perspective. Of course, it's a notable effort by Europe, as already mentioned, that they're taking the lead and trying to accelerate developments. But ultimately, shipping being a global industry, we need to streamline regional legislation with global. Otherwise, it is probable that we will be seeing trade distortions, which will actually have the opposite effect of what we want to achieve. Thank you.
Thank you, Charis. So, Michael, both Charis and Tom referred to the fact that one of the driving forces around decarbonization is the increased pressure from financial market participants. From the bank side, we see that those are also highly regulated. In Europe, for example, we see that the European Central Bank stresses banks' portfolio in terms of their risk management perspective around climate risks. And shipping industry is for sure at the top of their agenda. So, from a financier's perspective, is shipping decarbonization a regulatory compliance, or is it a value creation process that at the end will benefit both the shipping industry and the financial institutions?
Thank you for that question. It is, of course, both. But the important thing is we have no choice, and it's a matter of really timing. It's about when we can achieve the objectives we want to achieve. And part of that is, carrots and sticks. The sticks come from regulators, and the carrots hopefully will come from investment in the technologies that we need to achieve it. But I want to go back to your sort of original question, which is connected to the role of financial institutions. In 2015, the G20 set up the Financial Stability Board after the financial crisis, and they asked Michael Bloomberg and the then governor of the Bank of England, Carney, thank you, to, in effect, what led from their work was the Task Force on Climate-Related Financial Disclosure in 2015. So that's 8 years ago now. I remember getting a call in 2016 from my colleagues in New York asking if I would like our shipping business to be a pilot under TCFD. I said I'd get back to them later. I thought about it for half an hour, and then I realized that this wasn't really a choice, i.e. that if I was going to influence how we were going to handle looking at climate-related issues in the shipping business, we had to do it from the people doing the business because we understood it. We couldn't have people who didn't understand the business telling us what we needed to do. So the regulatory side goes back now a long way. What's now happening, and you don't see it in the headlines, but you've just mentioned the ECB, it's also the Federal Reserve, it's the PRA in the UK. The regulators are looking at climate risk as probably the most important risk that any financial institution has other than financial stability itself. The amount of capital that banks are now required to hold, and when Basel IV comes into effect, that's going to have a significant impact, and including on US banks who sort of opted slightly out of that. So financial stability outside of the macro and global instability that we now see, banks are safe, broadly speaking. Now let's focus, they want us to focus on the risks to banking from the change in the climate, the unexpected risks. So there are frameworks that are being developed. It's in the stages of development where audit is less rigorous, but these things are happening and they will end up being firmed up, if you like, over the next couple of years. A lot of this, of course, goes back to data. And Tom mentioned the word transparency. This industry has never been transparent because it hasn't had to be. Everyone now in the world has to be transparent because we have the technology for that. And the great thing about the shipping industry is having the IMO, having a global regulator where measuring the emissions and the impact on the environment of technological investment is going to be clear for everyone to see. So that's why I'm encouraged that actually the decarbonisation of shipping will happen and happen maybe faster than people think. But just going back to the politics, back during London International Shipping Week in 2021, a very senior EU official from a relevant department in a smaller group of people said that Greta Thunberg had had more influence over EU environmental policy than any other individual. And that is about politics. It's about a generation that has a different view about the environment. And where is that now being matched? It's now being matched by the consumer companies, the COSEV Alliance, Zamba. It is the container sector that will drive decarbonisation of shipping because the end consumer wants it to happen. And that is society as a whole too. That is the individual consumer that uses this to buy things and will use this to measure the environmental impact of what it buys and those supply chains. So it's a coming together, if you like, from the top politicians lead these things. A lot of people think there's a lot of hot air, but actually they start things that then develop and develop and develop. And we're in that phase now where, despite what's going on in the world, this is only going to get stricter and stricter, but that's a good thing in a way because it will provide the pathway that everyone needs, particularly investors need. They want to commit money to make this happen, but they need to have the data to know that it is happening, and they want to make sure they invest in the right things. So what the IMO did, as Charis referred to MEPC 80, has fundamentally changed the future of this industry, because the global regulator has set a pathway, in my view, for the IMO to align with Paris in 2028. We know that will be physically challenging, but a global regulator who sets such a clear signal to the industry is something the industry has to follow. This is no longer theory, this is policy and practice, and ultimately being driven from the bottom by the people. And it will happen at the pace at which those different sectors of shipping can actually achieve what is being asked.
So decarbonization will happen. Yes, please, Tom.
Sorry, yes. May I just pick up on a couple of comments made both by Michael and actually earlier by Charis. So you've got 3 publicly listed shipping companies sitting up in front of you here. And Charis, you were saying earlier that investors are receptive to the various green and decarbonization metrics that you present. I would share that, but I would say that that's not the complete view. Certainly, we're listed in the US, and we have to talk to, obviously, all investors, many of whom actually begin with the stance that decarbonization and many elements of ESG are virtue signaling. So that's where there can be a hurdle, which is why I'm trying to create a link to really what Michael was saying, which is, look, it's not virtue signaling, because there isn't a choice here. If you want to stay relevant, if you want to stay in business, if you want to generate value, you have to do and point in the direction that the regulators are pointing themselves. We don't have a choice in that, so we have to do that as effectively as possible and managing the associated risks as effectively as possible. So I think the element of having no choice in this is key here. Particularly for the discussion that we have to have, at least with investors.
Thank you, Tom. I must give Charis the opportunity to respond, or you want?
I will not disagree with Thomas. Obviously, regulation is what comes first, and it is basically what has been driving environmental developments in our industry in the past decades. This is not the first time that we're faced with the stringent regulations. We had the global sulfur cap back in 2020. Now it is the first time that we do not have available solutions, as I mentioned earlier, in order to identify how we're going to tackle this challenge. Not the short and medium-term measures, but the long-term targets when we talk about net zero. And as we all know, this will require clean fuels to come into the equation. So absolutely, Thomas, the key driver here is regulation. And it is what governments decide. But in the meantime, yes, we do see a lot of interest from our investors. Not all investors, of course, have the same profile. We have funds that are sustainability funds, and they place a lot of importance on our ESG ratings. They place importance on our voluntary disclosures that we do, whether through the Carbon Disclosure Project or our ESG reports. Now, are all investors sustainability driven? No. But there are investors out there who are interested in these ratings. We do get requests from them a lot of times. We do have to present to them what we do on a wide range of issues. And here it's worth noting that they're not only interested about environmental matters, right? I mean, it's indicative that we had many calls with investors that are interested, for example, in anti-slavery policies and anti-harassment policies and ship recycling and other type of issues that are not related to decarbonization. So yes, regulations come first. Yes, there are investors who care about ESG. Are all investors interested? No. Thank you.
So regulatory compliance is the priority, and then value creation follows. Alex, what are your views on the topic? On what are these driving forces for decarbonization? And additionally, please comment on the timeline around compliance, because we hear a lot of dates. We hear 2030, 2040, 2050. Are all of these milestones realistic in order to achieve these decarbonization pathways and commitments?
Thank you, Dimitri. Thanks, Marine Money. My views are that we have to underline the word equitable transition. It's very important. So, of course, you have the IMO and the member states that agreed with the revised strategy, but it did say sort of on about 2050, and it was a move in the right direction. But I was happy to hear what Michael said also about aspirationally in 2028, maybe seeing a further alignment with the Paris Agreement. I think that sitting here in Greece, in Europe, of course, it's kind of, we're in Europe, we see the Eurocentric Fit for 55, but if we were having this conference maybe in Asia, we would have a different point of view. So still, there is very much Europe leading with regulation, and whereas I agree that it's good to have compliance, I think we also have to, going back to the first panel, talk about supply and demand of fuels and who's going to produce these fuels, who's going to pay for the fuels. Our charter is going to pay for more fuel-efficient ships. These things haven't been resolved, and even sitting here today, almost 50% of the order book is still traditional fuels, and the rest is cleaner, like LNG, methanol, LPG, but we're not quite there yet in terms of the fuels of the next generation. So these ships are going to be in service for a while. We're going to have some sort of carbon capture, some retrofit to be able to comply. So in terms of further timeline, I think we have to be honest with ourselves, and there are massive opportunities, but we would be lying if we said that, you know, there are huge hurdles in front of us. So I think we have to have realistic discussions and work in parallel while these ships that are in order book delivering work on collaboration, like with Maersk McKinney Center for Zero Carbon or other places to trial, both on short sea shipping and ocean-going shipping. Of course, talked about containers being sort of the leading factor in terms of decarbonization, but also short sea shipping. I think we should emphasize that the ports will become energy hubs. I'm very optimistic around sort of digitalization there, and we've seen that in some ports, for example, in Rotterdam already. So it's going to be even more important to emphasize the supply chain link between ship and shore. And you know, it's a huge, massive challenge, but there are opportunities and we can still be positive about it.
Thank you, Alex. Frans, I think Charis mentioned before that technology will be an enabler in all this decarbonization pathway. And I know that you have done a lot of work with regards to technology and especially carbon capture related actions and implementations. Could you please elaborate, especially on the specific technology and how you see this going on forward in the near future?
Okay. I made a small transition myself as well, not an energy transition, but a transition from being a global head of a bank to now working for a company which tries to contribute saving the world. That feels actually pretty good. I am to link the two topics a bit together. Of course, politics are the driving force and we need the regulations. I'm more, sadly, a believer in the stick than the carrot. I think we need the carbon tax and all regulations, the Fit for 55, where the European Union is leading. But we need to create a level playing field globally to stay competitive. So, of course, IMO is also working on a global carbon tax. We as a company, I don't know how familiar you are with Value Maritime, we actually have a solution. It maybe doesn't work for every type of ship or every type of route, but we have 25 ships sailing in Northwest Europe capturing carbon, whereby the CO2 is used as a fertilizer in greenhouses in the Netherlands. As you know, we have shitty weather there. The tomatoes and the cucumbers do not grow as they do here in Greece or where I live in Portugal. You can see my nice tent. So we need fertilizer and we use the CO2. So I think that is a perfect solution. Is it scalable? To a certain extent. It comes with cost, but we have to start somewhere. Ultimately, if you look at scalability, CO2 will have to be via pipelines or vessels be put under the ground, or that is the ultimate solution for a circular event, is to use it as a feedstock for green methanol. But yeah, there are technical solutions available. We need the stick, because in all the meetings we have with shipping companies I've been working with as a banker, where the red carpet at certain times came out, depending on where we are with margins and availability of money. I'm now trying to persuade ship owners to invest money in a time where it is not yet a very clear business case, but it will come sooner rather than later, actually next year already, talking about EU ETS. I'm always, and I mean, maybe not surprised after 25 years, but a bit disappointed that if it costs money, everybody is like, well, it's not me. Who's going to pay for it? The charterer? Not yet. End consumer? Maybe. So the point is, there are solutions, and not perfect for all, but I think we need companies like us, and there are many more other companies in the technical field, try to embrace it and try it out.
We have some time for a second round of questions, but I want to make a follow-up question, especially on carbon capture. In your view, is this a short-term solution? Is it a medium-term solution? Will it facilitate the long-term aspirations for 2050?
I think so. I mean, as a previous speaker said already, I think the oil, the world is still addicted to oil, and it will take at least another, I think, somebody said 5 or 10 years, I think even longer, to make the transition. So carbon capture, for shipping, there are actually 3 solutions. Either you use lower carbon fuels, or you reduce the fuel intake by technical improvements, which we are doing, or the other one is carbon capture. So there are not that many alternatives. So even if, for instance, methanol also produces carbon. So you still need, with alternative fuels, you still need to capture carbon. So I think carbon capture will be a part of the solution for the next decades. And what was mentioned earlier, it's a massive industry, and it's going to take off.
Thank you, Frans. Tom, yeah, I was coming to you, but feel free to comment before I ask the question.
Sure, I was just going to endorse really what Frans is saying. You know, as an industry, we're facing a transition from a present where it's pretty much a mono-fuel environment. That's not quite the case, obviously, with the advent of LNG, you know, as a fuel for the industry a few years back. But essentially, from a very narrow palette of fuels, we're now trying to transition to what is likely to be a far broader palette. And if you consider that each fuel type is going to require its own infrastructure, its own supply networks, its own safety protocols, its own storage, etc., 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 the notion of having a solution, be it for the near, medium, or possibly even longer term, of capturing a single standardized molecule, CO2, I think that could be tremendously attractive, because I would presume that the speed with which you can roll out infrastructure to deal with this one single molecule, CO2, is probably far greater than the speed with which you can roll out parallel sets of infrastructures for the yet unclear fuels of the future. And I share Michael's view that, you know, liner shipping is the obvious candidate to act as the sort of the leader in the adoption either of carbon capture, once, you know, we crack the code of making it a technology which doesn't suck up so much energy in making it work that it's creating more carbon to capture than it's actually abating, which is, you know, a little bit of a challenge at the moment. But I think that the notion of liner shipping, green corridors, and ideally some sort of standardized solution is pretty attractive. So I echo Francis' sentiments.
Thank you, Tom. Michael, you're being called to finance the ESG or the climate transition of the shipping sector. And eventually, one of your ultimate goals beyond compliance is to reduce the financed emissions, so the emissions that you own on your own portfolio. We heard before about timelines, and we also heard some views on whether these are realistic or not. Do these timelines facilitate the angle that you see the business? Are these timelines adequate in order to enable you as financial institutions to transform and eventually reduce your financed emissions? And of course, tell us whether you see a risk at this timeline.
One of the challenges is that these things, a lot of these things are moving in parallel but at different speeds. And so your point, Dimitris, about what's effectively the Net Zero Banking Alliance, where 140 plus global banks, not including export credit agencies because they're government owned, and that's important, have committed on a well-to-wake 1.5 GHG basis to be net zero by 2050 and to set targets in all their portfolios for 2030 and then 35 and 40, etc., etc. So what happens is it becomes a competition for capital in those banks, i.e. banks will start measuring the environmental impact of the capital they have committed to each of their portfolios. And that goes from agriculture through to aviation, through to technology, one of the biggest emitters of carbon in the world today. You can only do that if you have available data. And that's what's going to drive all this. And this is sort of the new things, if you like, are you can now live stream GHG emissions to a desktop. You can actually see what ship is moving oil it shouldn't be moving, but people choose not to enforce that particular thing. But it's data and transparency that are going to drive all this, because banks committed to net zero have made legal, in most cases, legal commitments through their board of directors and will be measured transparently by their shareholders and by their regulators. What is great about shipping, because we can measure the emissions, is that every ship owner post MEPC 80 has a very clear signal, which is to reduce your emissions as fast as you reasonably can and to be transparent about it, because you will attract the cargo because of the Scope 3 emissions of the cargo owner. You will attract the capital because the capital will be emitting lower from an environmental perspective than certain other portfolios. So it's a great advantage in having that. So the data is now unavoidable because the data is key to compliance, but it's also key to the positive investment in those technologies that will help achieve that. I think there's a lot of people sort of worry about net zero in 2050. There's a lot to happen before we get there, and there's a lot to happen by 2030. And we know it is challenging, but what is important for the financial sector is that we want to be able to support that transition. And I think within shipping, there are going to be a lot of opportunities in the next few years. It's only just starting, where we will be able to finance that transition. But what I would say is, and those of you who are ship owners in the audience know the truth around different technologies, anything you can now do to lower your emissions is going to be good for you. And that will just get more and more transparent within banks, within insurers, within cargo owners.
So do anything in order to lower your emissions. So Alex, this comes to the next topic about fuel and how we're going to transit to more green fuels. I would like to hear your views on this topic beyond carbon capture, of course, which have already been analyzed.
So we have a fleet of 21 LPG carriers, and for us, carrying LPG at this stage makes a lot of sense to look at LPG as a fuel. And we have recently taken delivery of a dual fuel LPG carrier, so stepping into that direction. But going forward, I don't think there's going to be a clear winner. I mean, we've seen Maersk go towards methanol. Prior to that, a lot of people talking about ammonia, they still are. So I think it's important to emphasize, I've said it before, but the human factor in terms of safety. I mean, none of these, okay, some fuels like methanol have been around before, methanol carriers, but with regard to ammonia and any leakage, I see that some, going back to the ports, some ports like Singapore are already trialing some safety risk hazards, sort of how to get rid of any potential leakage with water mist spray, and they're working together with public-private partnerships there to address those concerns. But I think it'll be a basket. I mean, maybe it's not the most exciting answer, but it will be a basket, and we have to parallel them and work together. And it will come, but maybe for some of the commercial viability of those fuels will take a little bit longer than what we expect, even if the first ships come out shortly.
Thank you. Sorry, Tom, I just need to ask one more question to Charis, because Alex said one critical thing: work together. So, Charis, in Starbucks, you're pioneering developing partnerships that drive green transition. And I think we will all agree that no one can enable this transition on its own. So, what is the role that partnerships play in this decarbonization pathway?
Thank you, Dimitri. So talking about net zero goals and 2050, this is not feasible in the absence of collaboration. And I know there is a romantic connotation in the word collaboration. We're talking about business here, so I will try to make this practical. We will be seeing new building dual fuel vessels coming into the market in the coming years. For these vessels to switch from conventional fuel to clean fuel, first we need to have the fuel available. And second, this clean fuel needs to be priced at a reasonable level. Now, for all this to happen, it is necessary that governments have to step in to subsidize infrastructure related to the fuel production, related to the transportation, the storage, the bunkering of the clean fuels. We will need to see subsidies when it comes to the fuel consumption, and we will need to see other support measures coming from the governments, whether these are related to the certification of clean fuels, related to social issues, as Alex mentioned, for example, the training of the people that will be dealing with production, with transportation, with storage, bunkering of clean fuels, but also by facilitating the permits related to infrastructure around clean fuels. So a lot of work that needs to be done from the government front, and this is exactly where the green corridors come into play. Actually, as we speak, just across the street at the Stavros Niarchos Foundation, there is a discussion taking place by Clydebank signatories, the Clydebank Declaration, which supports the development of green corridors. At the moment, it's not me, right? So at the moment, there are around 40 such initiatives taking place globally. I can say very briefly a few words about the one that we're involved with. This refers to the iron ore trade between West Australia and East Asia. And why specifically this trade route? Because we as a company have a large exposure to this trade. We have partnered there with 3 of our major charterers, BHP, Rio Tinto, and Oldendorff. And the scope of the Green Corridor is basically to decarbonize this specific trade route of the world using clean ammonia. Why clean ammonia? Because there have already been many commitments by the Australian government when it comes to the production of clean ammonia in that specific geography of the world. Now, what we have already done within that green corridor is that we have conducted feasibility study to determine supply demand of clean ammonia, but also where the bunkering could take place. Now we're currently estimating total cost of ownership of a clean ammonia vessel, and we are preparing to engage in discussion with the Australian government in order to discuss with them what could be the steps from their side in order to accelerate the development of this corridor. So green corridors are extremely important in facilitating exactly the collaboration between public and private sector, but also within the private sector, we need to discuss among us, among charterers, fuel suppliers, what are the commercial agreements that will need to be enforced in order to enable any additional cost gap to be passed on down to the supply chain. Thank you.
Thank you, Charis. Time is up. Thank you very much for this interesting discussion. Thank you.